In today's video, we're going to take a look at 5 stocks that are reporting earnings on Friday. We got Exxon Mobil, Chevron, Procter and Gamble, Astrazeneca, and Abbvie. But before we get into that, we need to talk about what the Fed did yesterday and what the GDP numbers for Q2 were this morning. The Fed did decide to raise rates that 0.75%, and off of that news, stocks rallied hard. I'm going to zoom in on a 15-minute chart here on the S&P 500. And we can see right here yesterday during the day, this is where the Fed announcement took place. And we had a straight move higher strongly into the bell. And what we've got now on the S&P 500, we do have a series of higher lows that are put in. And in the short term, some higher highs. But again, we're still below this key shelf right around that 420 area. But this is one of the most constructive moves that we've seen so far this year. It's taken place over the course of 2 months. We got that pullback right before the Fed announcement, and you could read a lot of things on social media, and everybody's saying, uh-oh, we're going back lower. The Fed did save the day yesterday. But again, we still have a series of lower highs in on the S&P 500. So until that changes, while this feels good here in the short term, we might be in a month-long uptrend in the context of a 6-month downtrend, right? So we've got to get above that 420 zone really before we can start saying the bulls have accomplished something. Now, with that being said, we saw a 0.9% contraction in GDP for Q2. That was followed by the 1.5% contraction in quarter one, which is the definition of a recession. 2 quarters of economic contraction. Now, the market is forward-looking, meaning historically the market is dropping before a recession is declared and actually starts moving higher before the recession end is declared. Because the market, again, is a forward-looking mechanism, meaning while you're going to see lots of headlines over the next few days about recession and how we're in a recession, that's in the past. Q1 and Q2 have already happened. We're living in Q3 and looking out to Q4 at this moment. So the market is really going to be paying attention to whether or not it thinks that contraction is going to continue to spill over into another quarter, the third quarter, or even worse, once again into the fourth quarter. So this earnings season continues to be extremely important in terms of the guidance that companies are giving. Now, speaking of companies and guidance, let's jump in now and let's talk about those 5 names. All right, first and foremost, let's talk about Exxon Mobil. Now, I'm going to back this chart up and we're going to look at it on a long time frame. All right, we're looking at it on a monthly time frame. Exxon Mobil has a big overhead resistance zone from 2008 and that 2015 area just above that 100 area. Okay, now if I zoom back in on a daily time frame, we got that big push this year. Started the year around 60, ran all the way up over 100. This is the zone that we were unable to hold, fell down pretty sharply from there, right? The key here is going to be holding on to this 80 zone, and if you can kind of see the importance in on this chart, we've got 5 or 6 key price action points right in there at 92, and that's about where we're at this moment. So we're going to be looking for that move back up if we stay above 92 to test that 100-105 range. The key is going to be hold 80. Now, when we take a look at the other oil name in today's video, Chevron. Chevron paints a different picture for us, right? Here's that monthly chart of Chevron. Look at where the all-time high breakout takes place. It happens about that 120 zone, right? Here's 2014, another test that in 2017, and then that break here this year. Pushed all the way up to 180. We fell back down. And where are we testing? Where did we test? We tested the major level of what was once resistance, which is now acting as support in there at 130, and held and made a sharp move off of it. Right? We zoom in on a daily chart, you'll see that more clearly. Right? We pulled right back to that key level and made the bounce. Now the next key level, because again, we can look at this chart very clearly here on a daily time frame, and we can see the important price action zone right in here. We can see that important price action zone in there around that 130, and then we can see that price action importance up there around that 175. So watching Chevron earnings, 155 and above is a good sign. If we stay underneath of that, we're trapped in this 130 to 150 range. Underneath 130 is a major breakdown because, again, we're looking at a decade's worth of price action at that 130 level. So super, super key level to pay attention to in tomorrow's earnings. Next, we'll take a look at Procter and Gamble. Procter and Gamble, you can see a very important zone right here at 150, right? We got the major price action level from 2020, major price action in there 2021. We have this zone right here this year. We're testing it from the underside, okay? A move back up over this zone, clearly defined, kind of really is over 150, would be a very positive sign for Procter and Gamble. Again, you've watched me do this a bunch of times here. Look at this range, right? It's about equidistant top to bottom. We're trading in the middle of this multi-year range, which goes from about 125 to 165, and we're right there in the middle, right? We failed to get higher over this 150 zone. Look towards the bottom of the range, starting at about 130. If you can get above that, then you can start talking about getting back up towards those highs. It's a very important level in the Procter & Gamble chart. Astrazeneca, we can see clearly 54 is a big level on the chart. Really, it's 67. We traded just above it for a couple of days, but you can see the majority of the price action taking place right around this 67, 68 zone, and that support in there around that 54 to 56 zone, right? We're entering earnings just underneath of it. We're looking for that move above to test those all-time highs. If we stay below that level, you get some short-term support at 63 and then a big level down there around 58. So we'll be watching that for sure. Abbvie had broken out and made highs over that 120 zone at the end of last year and had one incredible run into the first quarter of this year. Gave a lot of that move back, but it is still nowhere near that breakout zone down at 120, meaning it's held up. So even though we had a sharp sell-off, right, it was able to find support right there at that major break level in 2022, make that nice sharp bounce. On this chart, we're really looking at that 160 zone or above to kind of get back up over this zone. You can kind of see that might be on a daily time frame, a little inverse head and shoulders action if we get back up over that 160 zone. Right, and we're really watching at 130 on the downside, and the major level is back down here at 120. It's still been a very strong chart. Year to date, still a good performing name, up about 13% heading into earnings, which is doing a lot better than the overall market is. Hope you guys have yourself a fantastic weekend. Remember, all these headlines that we're going to be seeing here about recession, that's already happened. Q1, Q2. We found out about the Q2 numbers today, but the market, again, is forward-looking, and so what's going to be important is what companies continue to say in their guidance throughout this earnings season and where we think the economic activity is heading forward. I'll see you guys next week. Take care.